Conference is being recorded. I will now hand over the call to the management for the opening remarks, and post that we will start the question and answer session. Over to you, ma'am.
Okay. Can you hear me now? Yeah.
Yes, ma'am.
Right. Good morning, and thank you for hosting us. I'm not really sure at what level of knowledge everybody is on Indoco. So let me do a very macro, general sort of projection of what the company is, and then try to get into some of the details. So Indoco Remedies Limited, this year, we actually celebrate our 75 years of establishment. The real journey is of past 60 years after our present chairman took over the company and turned it around. Today, Indoco Remedies Limited, for the year completed last year, has a turnover of 1,500 crore. For the half year this year of 800, and for the 9 months completed 1,200. So we've done 1,200 crore in top line for the 9 months completed this year. 60% of our top line continues to come from the branded sales in India. And the rest of the business is largely reg market sales of formulations and a little bit of emerging market sales and a very small portion of API. Besides selling to these various geographies, we also have two service divisions in the company. Indoco Analytical, which does high-end testing, impurities, profiling, sort of derivating and selling. We also have a clinical research arm, CRO, in Hyderabad, which largely does work for Indoco corporate and then also offers the services to others. In India, we have several marketing divisions. We have two divisions focused on acute therapy, pharma and spade. We have two divisions focused on dental, Warren Ace, Warren NextGen. We have a division for Gynac products called Spera, a division for Ophthal products called Excel, and then we have one division for the chronic products, which is called Indoco Synergy. Roughly, our basket comprises 40% from pure acute, another 45 to 50% from chronic, and 10% from 50% from subchronic, and another 10% from pure chronic. Coming to our international business, we have several filings in US and have a differentiated kind of model in US where we have our own filings, where we have a cost and profit share with some large players in US like Teva, Sandoz, and we also do contract research and contract manufacturing depending on where the product is in its life cycle. In Europe, current Europe business largely comprises of contract manufacturing. However, there is a gradual shift happening towards own filings as well as licensing out products. In the emerging markets, we sell our own brands. In the French West African markets, we have our own field force on the shop floor, on the floor. And this business is pretty much like the India business. So we have 3 manufacturing sites in Goa, 2 in Baddi, 1 in Aurangabad, and 3 API sites around Mumbai. Besides this, there is an R&D center in Navi Mumbai where we have 300 scientists who do everything from non-infringing process development of APIs right up to e-filing, whether it's for US, Europe, or any other country. This is in a gist about the company. We have 300 in the top 300 brands. We have 3 brands of our company featuring Cyclopam, which is an antispasmodic, ATM, which is an azithromycin brand, and Febrix Plus, which is an anti-cold product. This is roughly about us. I would at this point pause and be happy to answer any questions. Thank you.
Yeah, so anyone who wants to ask the question, please raise your hand. First question is from Sudarshan. Sudarshan, you can unmute yourself and ask.
Yes, ma'am. Can you hear me? Yeah.
Ma'am, you are on mute. Ma'am, you are on mute.
You have to unmute me.
Oh, it's already done.
Okay, you have to unmute me. I'm sorry. Yeah, Sudarshan.
Yes,
please go ahead.
Ma'am, a couple of questions from my side, more, strategically. If I look at your domestic business, I mean, significant portion of the business is still, subchronic and, acute. And I think we have a fair, basket. I mean, if you look at our reach through, the acute, through dental, through ophthalmology, I mean, from a penetration perspective, a mindshare perspective, we have done a pretty good job on that side. So if I'm looking at, say, the 3 years going forward, how do you see this shift moving? Number one, between the subchronic and chronic and acute. And number two, I mean, if you can give a little bit more color about prescription, how much is currently coming in from the generic, the practice, practitioners versus how do you want to move towards specialists? I think that.
Yeah. Thank you for that question. Very interesting. So let me start by saying that the acute, subchronic and chronic is a segmentation by use and by therapy and not by who prescribes it. Okay. So if you want to understand the breakup by prescriber profile, 46% of our prescriptions continue to come from the GP, contrary to 48% for the entire industry. So when it comes to GP dependence for prescription, we are actually much better placed because we have developed the mass specialists, as they are called. Okay. So industry recognizes 3 kinds of doctors. You have the general practitioners, both MBBS and non-MBBS. Then you have the mass specialists. These are pediatricians, gynecologists, ophthalmologists, dentists, ENTs, surgeons, chest specialists, consultant physicians. Everybody comes into that gamut, ophthalmologists also. And then you have the super specialists. Industry recognizes these as cardiologists and diabetologists, endocrinologists. Okay. So then if you look at how we get support from this category of doctors, then 46% today, we get support from the GP, right? So, and it's not as if our acute divisions do not carry subchronic portfolio. So what Indoco has done over the last decade is managed to move our pure acute portfolio to a acute plus subchronic portfolio. Now, subchronic are products for which prescriptions run for 2 to 3 months at least. So you have got ophthal products for, tear substitutes, you have antibiotics, you have several products which are long-term use. Then in dental, you have products for submucosal fibrosis, desensitizing products, which are also for several months. In gynecology, you have iron preparations, you have hormones, which run for 6 to 9 months. So by very use, we call them subchronic, meaning that a prescription runs longer. Okay. So coming to where we stand, I think we are doing a very good job when it comes to getting prescriptions. Our prescription reach with a consultant physician also is very good, in addition to pediatricians, gynecologists, ophthalmologists, and dentists. We are actually ranked 20th, 20, when it comes to our standing by way of prescriptions. And we sort of overtake several other companies which are much larger than us, but generate fewer prescriptions, but their value per prescription is high. So as we further consolidate on our subchronic basket, and as we get more from our chronic segments, we can expect these prescriptions to generate far more value for the organization. I hope that has been a clear answer. Can you not? Yeah, don't keep muting us, please, because yeah, okay. Yes, Sudarshan.
Yes, ma'am. I understood, ma'am. It's very clear. Ma'am, my question was more, if we switch from, say, subchronic to chronic, I mean, chronic is more so, say, for a diabetic patient, it's an annuity for a life. And typically, if I look at the market, I mean, the market is more skewed towards players who have a lot more support. I mean, to the doctors, a lot more R&D, etc. So I'm just trying to understand, what is it that is required in terms of investment, in terms of effort, to basically make that chronic segment larger, say, in the next 3 to 4 years.
Yeah. So let me a little bit correct you here. You do not need R&D in India to go to the chronic specialists. In fact, if you look at products of some of the top companies, they would be third-party outsourced. So it's very clear. What we are doing, in fact, is that we're using a lot of the equity we have built by way of the ANDAs we have filed for US as a market, where we focus on chronic segments. So for US, if you look at our basket, it is largely cardiology, diabetology, CNS. Now in India, we do not participate at all on the CNS side. But if you look at a product like Aloja, which is an allogliptin, so we have introduced it through our chronic division in India, which is actually our research product. Okay. So to succeed in the chronic segments in India, you do not really need R&D. What you really need is a presence and relationship with the specialists, where Indoco is possibly lesser known than in any other. And here active work is happening. We have today a division synergy, which is focusing on key therapy products and products in growth segments. So we have a product Glycheck M, which is a gliclazide metformin, which was developed by, it's a 10 crore product today, and it was developed by a mass division, which this division now is going to grow further. We have the Aloja group. We are also present in the telmisartan range. And here the growth markets give us. So it's not as if we are not growing. If you look at our prescription growth with the cardiologists, we are doing very well on a very small base. But because our other, our other specialties continue to grow, if you look at cyclopam, for example, this year it's growing at 20%. So while acute grows, the contribution doesn't change much. But specifically in absolute terms, if you check, we have really progressed. We also shared a lot of tail in chronic this year. So it might look as if we have not added much value, but that's it. Yeah.
Sure, ma'am. And do we have any target that you have over 2 to 3 years that this is the mix, you're going to have from the
current? We should have chronic contribute at least 15% of the top line in 3 years.
Sure, ma'am. One more question from my side, again, on the overall strategy. I mean, we talked about the 5,000 crore, the target over the next 3 years. I mean, here, ma'am, I'm just trying to draw a parallel to what I'm seeing, across the industries. I mean, not necessarily one company. Broadly, when I look at the incremental ROC, specifically when company is going to the US, what I find is the working capital increases, and that is because of the buyer consolidation there. I mean, most of the companies are anywhere between 140 to 200 days, about that. They are underutilized assets, so the margins are significantly low. So typically these guys, I mean, most of the players, barely do even cost of capital on that side. So when you move from the current level to 5,000 crores, I mean, I would assume that your exports will drive faster as compared to the domestic.
A little faster because of the lower base. But when we say exports, it's not entirely only USA. But I'd like to come back to the US piece a little later for how we are different. Our US is different from everyone else's US. Okay. So we need to understand that. But still, our international business is also substantial growth is going to come from emerging. Where we have our brands, we do not participate in tenders there, right? And we are pretty de-risked because our presence is also there in South Africa. We're also there in Europe, okay? And US for us is largely sterile, injections and ophthalmics. And in these categories, although there is a lot of price erosion in solid orals, these categories are able to hold at 60% erosion, A. Also, these are very difficult to develop and difficult to manufacture products. So it's not as if, even if it appears that a lot of filings are there, frankly, if you check any given time, then you see a lot of shortages of these products on FDA sites. Yeah. So we are taking the US steps in a measured manner, conscious of the fact, otherwise we would have been there 5 years ago and you would have seen us not able to deliver. Okay. So we are taking our steps cautiously here, completely aware of the kind of costs at the front end. And if any decisions of that kind moving towards front end further for Indoco are taken, they will be in a measured manner with full cognizance of how much value add we can do to our own self by being present locally. Does that answer your question?
Perfect, ma'am. So incremental growth will not dilute the ROC. Very clear.
No, certainly not.
Sure, ma'am. And one thing, I mean, when you talk about sterile, I just wanted your, opinion, because we see a lot of US FDA actions happening on that side. So how are we different? Because, we got out of Goa a couple of years ago, and, that is basically now paving the way for, growth with, brinzolamide, etc. So now how are we positioned as far as, the plant operations are concerned?
So the regulator continuously ups its ante for benchmark. One should never say you are way ahead now and ready and all those things. I don't believe in that. But since the time when we had our warning letters to the sterile unit, I can say that Indoco has changed a lot. As in today, we have a very clear function, the CTO function, the technical officer, who is completely in charge of a new vertical for compliance. So Indoco today has a much better quality management system. It has a much better hard and soft infra for managing our issues. Most of our plants are on TrackWise, which sort of allows us to track issues as they happen in the plant and attend to them. So we are much better able today to manage any issue when it happens. And it is now part and parcel of kind of supply to US, the likely issues with FDA. They do not and have not stopped our supply from plant to US at all. Yeah.
Sure, ma'am. And I think we are expecting, inspection, given that 2 years have passed.
Yeah. Of course, we are expecting an inspection. We're
And
waiting
unit
for
one
also.
Yeah. And unit one, we are fairly optimistic of clearing the observations.
Well, I shouldn't say anything. We have finished our first response to FDA, clarifying issues. We will ask for an interaction with them to further clarify stuff. And after their acceptance of our response, we will then get into the mode of completing whatever they, time-wise completing what they expect of us. So it will take some time, but I'm pretty confident. Yes.
Sure, ma'am. Thanks a lot. I'll join back the queue.
Anyone who wishes to ask the question can raise hand. Ma'am, I also have one question related to the semi-regulated markets. Earlier, a few years back, if we used to talk about that, we would increase our product registration in the semi-regulated markets. And, from last few quarters, the most important guidance was always given on the US and the Europe market and the domestic market. But this SRM, where we are present in which all countries, what are we doing there, what are our strategies, how are we focusing? Because I think we moved from low value products to the high value products in the SRM markets also. I think we entered into some of the partnerships also.
Yes.
So if you can give a brief on, what we are doing on the semi-regulated part and what are our expectations ahead.
Yeah, so in the emerging markets, or the ROW, semi-reg, whatever you want to call them, we are actually present in various markets of Africa and Asia, predominantly, some markets in LATAM. So here the models are, we sell our brands everywhere, but the models are a bit different. In some of the African older markets like Kenya, Uganda, Tanzania, we have a relationship through agents, local agents, who have their people on the field. And we have country managers who track progress of our products, their sales. Okay, but the point of purchase is for the agent who buys from us. When it comes to French West Africa, we actually have our people in the field who promote our products. Okay, and these markets we are seeing are doing very well. And we've been sort of filing a lot of products and getting good approvals from these markets. And I'm expecting, and these are good markets because the model is very much like India, and margins are even similar and better kind of for the basket. So I'm very optimistic going forward that emerging market sales, we will continue to grow them. We understand this business very well. And we are adding geographies as well here. As you know, French West Africa is made up of many small countries. So we are currently present, if I'm not mistaken, in 5 countries. And the plan in this year is to add 3-4 more. And that is how we will proceed. So there will be sort of increment in the geography as well as divisions added wherever we are present. So both ways we are going to increase our footprint in these markets. And these divisions, I think, if I'm not mistaken, are taking in excess of 25-30% growth every year. And we work also on good payment terms here. We have good buyers for French West Africa, for example, where, you know, there is a French company which purchases for and distributes. So it's a very good, good business for us. I hope that answers your question, Rashmi.
And ma'am, when it comes to margins, when you are saying that, you know, it is similar margins, you are comparing with the company level margins or with the domestic margins?
Domestic.
Domestic, okay. And how is the distribution strategy, you know, compared to India in this SRM markets?
So like I said, when it comes to actual distribution, you have to depend on the local agencies. So the sales is ours, distribution is through them, through the purchase. Okay, but we track both primaries and secondaries there also.
Okay, so it is like we manufacture the products and then it has been marketed by the local agencies over there.
No, marketing is done by us.
Okay.
Selling actual distribution, as in the goods movement, happens locally.
Understood. And ma'am, when you...
Yeah, I'm sorry.
And what about the working capital days over there?
So working capital days in like LATAM markets and all, we work against LCs. But wherever we have good relationships, it's anywhere between 120 plus.
120 plus. Okay.
Sorry about this.
Yeah. And ma'am, about European market, like you said that, you know, you all have received some tenders which got renewed, and now we are expecting that, you know, that 15 to 20% growth every year we can expect. But, you know, for the Europe business, we are also planning that, you know, from Goa plant, we'll shift all our products to Bati and the new facility. And Goa plant one, you know, what are the, you know, plans over there? Are we going to make it dedicated for the US facility? You know, how is it, if you can give some idea on that?
Yeah, you said it all. Actually, we have moved and almost at the end stage of moving most of the product from Goa to Baddi manufacturing. And Goa 1 is right now only manufacturing one product for US. But post clearing of the warning letter there, we expect to get many more products to supply from there. Okay, so plant 1 will be kept for US exclusively. Yes.
Okay, and the shifting of the products from Goa 1 for the, I mean, for the which is catering to the Europe business.
Yeah, it's almost done. Yeah,
it's almost done. Okay, okay. Thank you. I think there is again the question from Sudarshan. We can take it ahead.
Yeah. Yes, ma'am. Just taking forward on the emerging markets.
Yeah.
I mean, I think in the third quarter call, you know, we discussed fairly about, you know, the European exposure as far as hedges is concerned. But some of these markets also tend to be fairly turbulent when it comes to, you know, the exchange rates. I mean, here do we bill a lot in dollar terms? How
yes,
is,
yes,
you know,
yes, yes. It's all dollar terms, and most of these markets where very high turbulence is expected, like LATAM, etc., it's against LCs. Correct, Pramod? Correct me if I'm wrong. If you want to add anything here, I think he's on mute. Can you unmute him, Rashmi?
Yeah, thank you, Rashmi. Yeah, Mr. Sudarshan, our billing is in dollar to these markets. And of course, we hedge the currencies. We have certain natural, hedging to the extent of import. But all the currencies, be it dollar, euro, and pound, are hedged based on our overall, forecast.
So we hedge about 75% of the overall, expected sales for the full year. Is that right?
In the range of about 60 to 75. Yes.
Sure.
Depending on the market conditions, we take a call about hedging.
Sure, ma'am. And on the, product selection, I mean, if you are looking at probably, Africa versus Latin America versus India, I mean, one is you would obviously have certain products which are common, but the markets are a little different. So how do we go about, selecting the products, identifying the markets? How do we position ourselves, to the strength of each of these markets?
I'm sorry. I had to take something important. Can you repeat that? So that
Yes, ma'am. So if I look at, India and emerging markets, so each of the emerging markets has its own type of behavior, its own, demand, and it's basically a country by itself. I mean, with a certain amount of diversity. So one is, you have, you develop a product and you can cross sell it across the country. The buying behavior, the dynamics is across different. So how do we go about, creating a niche for ourselves in each of these markets with certain products?
Yeah. So, quite frankly, our product range in India is so diverse, our brands, that it allows us to pick and choose from there. So, I mean, of course, the African markets are at various stages of catching up with molecules. So you might still see a ciprofloxacin doing as well there over a CIFA. Okay. But then we have a Cipro brand from before. So that is taken up. You see Antelmintix like ABZ, which is a deworming product. It is number one in many of these territories like Kenya, which is typically a proper product for Africa, because deworming is done on a mass scale there in schools, etc. You see many of our ophthal products get picked up. You see, so we have actually picked up only those products from our India basket, which are most suitable for these countries. And here acute therapies, I mean, if you look at Indian market, probably 30 years ago, there, you had antidiarrheals, antibiotics, rule the roost. Chronic was much smaller. So fortunately for us, we have a lot of brands in the acute segment, which are apt for these markets, and we pick them up. Considering how to pick up products, these markets do not have too much of, what shall I say, structured MIS. We have tried to look at IMS and many others, but it is not really correctly depicting what gets sold. So there is a lot of RCPA done by our people. RCPA is nothing but retail sort of perception mapping to check what sells. And we are aware of that, and accordingly products are chosen and sold and registered. Yeah.
Sure, ma'am. And here the market intelligence, I mean, one is we talked about, for example, we sell it to the French, large company which buys it in French Africa. So are we relying a lot more on the distributor strength that we have to give us a feedback? And given that we have such a large pool, we can basically plug and play the way we want to the market.
No, we are not depending on third party, because it's only the purchase and goods movement that happens through them. The actual awareness of what happens on the ground is through the boys who are on our payroll. So they are the ones who are meeting the pharmacists. They are the ones who are meeting the doctors. They are the ones who are aware of the product movement. They are the ones who work on creating demand. So the secondary side is entirely, if you look at India operations, so you have research, manufacturing, you have distribution and sale, right? So it's only the distribution piece which is done by somebody else. That's it. Yeah.
Sure, ma'am. And ma'am, with respect to, the profitability today, and I mean, emerging markets is definitely growing at a faster pace. So given that emerging markets has higher working capital requirements, I mean, do we believe that at some point of time, the margins in the emerging market should be higher, at least to take care of the higher working capital requirements?
They are. That's what I said.
Okay, so it would more or less, the margin should be in line with India. Is that right assumption, ma'am?
Yes, I said that earlier.
Sure. And ma'am, with respect to, the overall business, I mean, today, if we are running at somewhere between 1,600, 2,700 crores, one is, we are growing very fast in the US, and there is a fixed cost benefits that is flowing through because of the operating leverage, US, Europe, and emerging markets. I mean, currently, overall, what is the kind of utilization that we have? And, say today, if you are running at a margins of, anywhere between something like around 18% to 20% range. In 3 years, I mean, where do we see the margin? Because you are going to see operating leverage in these markets.
When it comes to capacity utilization, operating leverage, our two broad businesses, the capacities are looked at very differently. India business, it's about the people in the field. That's our biggest fixed cost. And getting more per man is the best way of making more money. When it comes to international business, again, when it comes to emerging, it is about the man getting more return and product getting sold more. It is only when it comes to the reg markets that it is about capacity of plants. And here, our erstwhile, we started international business supplying to Europe, very pure sort of mature generics. And what we are doing is that we are certainly not building factories to, make more of this kind of product. So what you will see is capacity being actually freed for better and better products to be manufactured for the reg geographies. So one should not be looking at capacity utilization today as a measure of what kind of margins you can make going ahead. I hope that is clear.
Sure, ma'am. Sure. But largely the direction should be given that we are moving up the value chain. The margin should inch up. I mean, from the current levels.
Yes.
Sure, ma'am. And one question before I join the queue on India markets. I mean, we see a lot of in-licensing happening across several large companies through MNCs. They get, products which relatively, is fairly very useful. We see a lot of M&A. I mean, not necessarily companies, but also in terms of brands. Now, given that, if we look at our, company, we have a fairly large, portfolio. I mean, as far as the brands are concerned, growing emerging markets, growing US markets. So we do generate a fair amount of cash as well. So do we have pockets which you want to fill through, say, brands, or you want to, do something like in licensing?
Yes. We've been looking out very actively for that. In a couple of ways, there are geographical weaknesses to be covered. We're looking at that. We're looking at current strengths to be sort of reinforced. So if you look at our rank 20th on prescriptions across all doctor specialties, if you look at a pediatrician, we would be ranked anywhere between 7th and 9th. When it comes to a dentist, we'd be ranked in the stoma space number 1. With ophthal, we are ranked number 7. So there are definite strengths when it comes to mass specialists for support. And these can be very well leveraged by licensing in correct products there. So we're continuously looking at good products, good technologies, good ideas which we can bring in or license in, or even acquisition for that matter.
Sure, ma'am. Thanks a lot. I'll join back.
Anyone else who wants to ask any question, they can raise the hand. We have one question from Pratish Krishnan. Pratish, you can just go ahead.
Yeah, I just want to understand the US portfolio, ma'am, in terms of, in the past, you've seen some kind of volatility in terms of the overall your top line growth itself. So based on the current portfolio that you have, how should we look at it in the sense? I mean, what have you done to kind of de-risk in terms of from a revenue perspective, both US and both UK also?
Can you repeat the first part, because I'm hearing some talk behind, so I couldn't get the first part.
Yeah. No, I'm just wondering from a US and UK portfolio. In the past, we have seen some kind of volatility in terms of revenues itself. So if you look at your current portfolio today, current offerings, how should we look at it? I mean, like both growth and how have you de-risked in terms of the volatility side?
Okay, so when it comes to US in particular, we have actually selected products perfectly as per their product life cycles. So except probably one allopurinol, which was more of a learning curve for us, where we are completely integrated, and which is a sort of commodity, as in it is a mature generic. Otherwise, if you see the basket properly, you have got products which add great value. So we are into suspensions and difficult to formulate injections and ophthalmic preparations. We are into specialized solid orals. And from a patent expiry perspective, we have a good balance between FTFs and early to launch generics. So that way the basket is really very well planned for US as a market. When it comes to Europe also, our own filings are planned very properly. It is only the contract manufacturing for others that we were doing, largely in UK, which is a legacy business as regards Europe is concerned. That's the only one which will be shared and corrected, but that does occupy quite a capacity with us. So that's what I meant. Yeah. Does that answer your question?
Yeah, sure, it does. It does. Yeah, thanks.
Yeah.
And should we assume that if you look at from a absolute revenue perspective, I believe they are like around $40 to $50 million combined. In the sense, I mean, if they have to kind of double, what is the timeline that you want to put in terms of for this to double over the invest? Like how many years it will take?
You mean business coming from US and Europe?
Yeah, that's right.
Okay. So we are looking at around 20 to 25% growth for Europe, and US can do better than that, frankly. So that you can put your numbers together. Yeah.
Sure. And lastly, in terms of, I think you've spoken about that 5,000 crore number. Probably it is like FY28. Any broad kind of framework in terms of like what geos or what has to be done for you to kind of to reach those numbers?
Yeah, there has got to be a lot of effort put in. I mean, it's not going to just happen. We recognize that, but we know we have several levers. So, in India, we have been working and focused on increasing return per man. We are looking at sort of leveraging many things, including getting more business from North, growing where we are strong in the dental segment further with better reach through the supply chain, improving the contribution coming from specialty. That's the India bit. When it comes to international, at some point we will have to get into front end in US, but we are doing it in a measured manner, looking at all the challenges in the current environment. Fortunately for us, much of our big blockbuster approvals are in 26, 27. And by then we should be able to be in the front end so that we do not lose margin to the others in the value chain. When it comes to Europe, as I said, it's going to be around 20% growth in revenue, but with doing fewer units, if you know what I mean. So we are focusing on better products to drive us, right? And in emerging, it is, as I explained earlier, through more filings, more sales, increasing sales of present brands, as well as going into more geographies. So across the board, and API by itself, I have to say that, API by itself today, 70% of its top line gets consumed internally by Indoco formulations. But we are in the process of increasing our capacities there also, so that we can create our own sort of wish list for sales for API. So we have several engines of growth, and I feel very confident we'll be able to hit those numbers in a strategic manner. In India too, we are concentrating on new launches, which was an area of weakness for us in the past. And have to say, in the last 15 months, at least 3 new products have been launched, which are doing exceedingly well in their own segments. As we speak, a 4th one is underway for launch. And 2 more are slated in the coming quarters. So initially, we looked at the 2 acute divisions for new product value add, but now it is soon spreading to the mass divisions. So I feel great confidence for India business itself to be able to also hold its contribution. Yeah.
Okay, ma'am. Yeah. Thank you so much.
Anyone else who wants to ask the question, please raise the hand.
If that is all, Rashmi.
I'm just checking if anyone wants to ask the question. I think there is one question again from Sudarshan. Sudarshan, you can go ahead.
Yes, ma'am. So, I mean, on this 5,000 crore mark in 2028, I mean, I would assume that each of the division, newer division, etc., will become very large. So, from a management bandwidth perspective, I mean, if you can give some, idea with respect to what is the hirings that you are looking at, how is the structure going to be changed? Because as we become bigger, the structure needs to be cleaner. You need to have a lot more bandwidth on that side.
Yeah, certainly. I mean, and we have been doing it. An organization is in a continuously evolving mode. And at Indoco, we have always tried to see that the OD is ahead of what the company needs. So continuously, I mean, if you look at the last 5 years alone, from CTO as a function, CMO in India marketing as a function, a VP level person for MIS, and more recently a person to exclusively look at the opportunities for dental beyond what we do. So it is a continuous phase. Not only do we add people, functions, strengthen the organization, we also strengthen positions. So a decade ago, if there was a GM heading each manufacturing site, today there is an AVP, VP heading it. So as business increases, one has to plug the gaps, and we are doing that very effectively to be prepared. There is complete understanding that it cannot happen with the present people, with the present product, and with the present capability. That is fully understood. And at the same time, internally, people are being sort of rejuvenated. People are being retrained to handle greater opportunity. Yeah.
Sure, ma'am. And
Mr. Sudarshan, in addition to what Madam said, we have strengthened our systems and processes also. So we have invested heavily on technology. As we already announced, we have implemented SAP across all functions, all sites, all businesses, all divisions. So that is one. Secondly, we have recently launched Ariba for our procurement initiatives. We are also in a process of implementing dashboards. So a lot of initiatives at site. We are in a process of using certain new technologies. MI, artificial intelligence, certain. So we have been investing heavily on technology front also, in addition to strengthening our human resources.
Sure, ma'am. And ma'am, with respect to newer launches in India, we all know that, getting a product like brinzolamide or, a para 4 product gives you an edge as compared to other products in the US. But in India, I mean, I have seen specifically with tenaligliptin, the first mover advantage did really play, I mean, on the shift. So, I mean, are we looking, whether it makes sense to, get a product either through in-licensing or any means to have a first mover advantage or to take some advantage on that side?
So like I said, India business, really is about creating brands. So you have a company launching a product which is a 10th launch and still become number 1. It is more about marketing prowess. It's about ability to sort of connect with the doctors, your ability to handle the supply chain. So the reach is created. While research is very important. For example, we have more than 20 ANDAs on the ophthalm space. And certainly each of those products can be launched through the India ophthalm division that we have. But the abilities may not be concurrently the same. For example, we have a full basket of chronic ANDAs, but our chronic sort of setup in India may not be so strong that they can take mileage out of a first time in India launch, whereas a dental would. So it is important to not confuse the two. Wherever there is an overlap and there is a sort of a strength which can be spread, we are doing it. But it doesn't need to be looked at like this. So in India, I would continue to want to strengthen my acute subchronic presence by launching more and more products for which I will get support. But I may not necessarily look at them from a research perspective for US as a market. Mm-hmm. At the same time, in ophthalmology and cardiodiabetes space, certainly we can sort of marry so that whenever we go to DCGI, for example, for a license for a product which we want to manufacture to take validation batches for US, we also do a bio study in India. So the same one can be used for launch in India. Okay. But the first mover advantage there is not likely to give me as much return as a first mover advantage I would get in a GP segment. I hope you get
Sure.
that.
Sure, ma'am.
Yeah.
Perfect. Yeah. That's all from my side. I'll join.
Right.
I think the last question we can take it from Pratish. Pratish, you raised your hand, right? I think he got disconnected. Fine, then that was the last question. Thank you everyone for participating in the call. Special thanks to Indoco's management, ma'am and Pramod sir, both for giving their time to us. I would hand it over to ma'am for the closing remarks.
Yeah, thank you everybody for patiently listening to us. And thank you for the very interesting questions. Thank you, Rashmi, for hosting this. Thank you.
Yeah. Thank you, ma'am.
Bye.
Thank you, Rashmi.
Bye.
Thank you, everyone. Thank you, madam.